Before we get into our presenters, a disclaimer: the analyses and conclusions of Ryerson Trading Association contained in this presentation are based on publicly available information. RTA recognizes the risk of trading securities and does not advocate the purchase or sale of any security, nor does RTA take responsibility for any transaction that may have occurred due to our presentations. This presentation and the information contained herein is not a recommendation or a solicitation to buy or sell any security.
So, hello everybody. My name is Derek Yu, and I'll be taking you over markets. So first of all, what is the stock market? Well, a stock market is a collection of stock exchanges. The term stock exchange and stock markets are used very interchangeably, but realistically, a stock market is one that is made up of several exchanges. For example, the American stock market is predominantly made up of its two most prestigious exchanges, the New York Stock Exchange and the NASDAQ. So realistically, the short history of the stock market was global trade was really beginning to emerge in the 16th century. However, these trading ventures, from Europe to Asia, were very costly and risky. Lots of companies did not have the capital to raise for a trading venture halfway across the world, especially a very risky one where ships could sink from storms, pirates, and the like. So as such, the stock exchanges were created as a way for companies to raise capital for these ventures. Seen here is the Dutch East Indies Company, the first incorporated company with issued stock at the first established stock exchange, which was the Amsterdam Stock Exchange in 1611, Amsterdam. So how were trades made back then? Way in the ye old days before, these wonderful things called computers that you and I are using today, stock trading looked a lot more akin to an open auction for cattle. So traders gathered at what they called trading pits, and they simply yelled at each other to initiate a trade. So say, for instance, I'm going to sell 10 stocks of company A at $10, and then another trader will then initiate his interest to buy from me. At the end of the day, we'll just meet and settle all our trades. So who are stockbrokers? So for the average trader, standing in a trading pit all day really isn't much of a feasibility, right? For the average bloke, they have work to do, and for the rich people, they have better things to do. So stockbrokers acted as intermediaries for traders, so they will fulfill trades at their client's behalf as best as they could within their parameters. So how are trades now? How are trades made now? So thanks to these wonderful things called computers, we could easily transmit large quantities of data over large periods, to a large audience. So realistically, we now have online brokerages with significantly lower commissions nowadays, allowing us retail and traders to easily buy and sell stocks. So over here, we have two of the most popular online brokerages, Questrade and Robinhood. The latter having some controversy around it, but that's a story for a different time. So over here, we have the bid-ask spread. The bid-ask spread is simply the difference between the prices of how much people are willing to sell stock to how much people are willing to buy it. So assets with a bid-ask spread that are high tend to be less liquid than assets with a low bid-ask spread, because when the bid-ask spread is low, it tends to mean that demand is roughly equaling supply, and it is being traded quite actively in high volumes, and vice versa if it's low. So realistically, trading volume and its importance lies in how liquid a stock is. So the quantity of a stock being traded is intrinsically related to its liquidity. A stock that is more liquid is easier to buy and sell, and vice versa, the less liquid it is. So realistically, you would want to be invested in stocks that are relatively liquid, as to not end up, being a bag holder. So my poll question is, with the advent of online brokerages, are stockbrokers irrelevant to the average trader? I'll be closing the poll in 5, 4, 3, 2, 1. So over here, it says that 23% of you voted yes, and 77% of you guys voted no. May I please have some answers on why?
Perhaps people think retail stockbrokers are still relevant because there are many people, like you said, billionaires and millionaires, who don't have time to make these trades on their phone. and they'd rather someone do it for them.
Not to mention, stockbrokers also offer some useful advice that people may find helpful, such as financial advice and just like advice on how to trade. Said advice should be taken with a grain of salt, as in any advice, but it's offered. Oh, do I have to press share results? Oh, my bad. Does anybody else have any questions about stock market? All right, great, thank you. And I'll give it on to my colleague Baruch to talk about NFTs.
Hi, everyone. So my name is Baruch Ano, and I'm also an analyst here at RTA, and I'm just here to talk to you guys about NFTs. So just quick before we begin, NFTs stand for non-fungible tokens, but to the average person like you and me, that means nothing. So I'm just going to give you guys more comprehensive overview of what they actually are. Next slide, please. So first things first, what is an NFT? So the first thing that makes an NFT is that it's unique. So the example I gave here is Babe Ruth graded baseball card. And what I mean by unique is that there's only one of one. In the case of baseball cards, there's serial numbers to distinguish them from fakes. And the same thing using technology, NFTs, you can check whether they're fake or not. Moving further with NFTs, is that they are digitally verifiable. So what that means is if you were to search up on the blockchain on which the NFT is stored, is easy to determine the authenticity of said NFT as well as who the owner is. And then finally, an NFT could be anything that is digital. So on the current market of NFTs, majority are pictures and artwork, but other applications could be moving on in the future, could include music. Next slide, please. So how do they trade? So first things first is that they're sold on several websites where users sign up and connect their crypto wallets, similar to how people purchase cryptocurrencies. So some popular sites include OpenSea and Nifty Gateway. And on these websites, it's important to remember that NFTs are typically sold using two primary cryptocurrencies, one being Ethereum and the other one being Solana. This is because these are the blockchains in which the NFTs are stored upon. And when connecting your wallets and to purchase NFTs, you would obviously need said amounts of Ethereum or Solana to conduct these purchases. And finally, the process the NFTs go through when they become made available to the public is known as a minting process. Some of you guys who are aware with finance, it's similar to the same process that stocks go through when they go through their initial IPO. Next slide, please. When do they trade? So similar to crypto, NFTs trade 24/7. As I mentioned before, minting of new collections is the process of when they become made to the public for the first time. And they're often published online through social media. So in particular, sites such as Twitter and Reddit often have tons of followers and dedicated pages, just letting the public know when certain collections are releasing, as well as certain websites, including nftcalendar.io. So the picture that you can see to the right is just a screenshot I pulled a couple of days ago of a collection that's premiering soon. So the main thing that you guys have to know about when they trade is that they trade 24/7. And additionally, for most NFTs, they go through a bidding process similar to an auction, where you bid on the price. And if you have the highest price at the end of the determined period, you'd be able to get the NFT. The last thing I want you guys to know before I move on to the next slide is that you just want to make sure that not only do you have the necessary amount to bid to purchase said NFT, but as well as a little bit extra to cover any transaction costs related to the transaction. And this is associated to gas fees with crypto. Next slide, please. How can you trade them? So as I mentioned before, they're traded on auction sites such as OpenSea. If you see the picture to the right is a very popular Bored Ape collection, which you may have heard of in the financial news, currently trading for over 200,000 USD. So how do you trade them? So the first things first, once you purchase an NFT from an auction site, this is stored on your crypto wallet. On your crypto wallet, it is safe there, as well as it is able to be authenticated on sites such as Etherscan, where you can search on the actual blockchain to see where the transaction happened. So the screenshot I have at the bottom of the page, as you can see, is taken from OpenSea, where this Bored Ape is being traded as we speak. And it just shows several transactions that occurred with it, where the last sale occurring 6 months ago for 50 Ethereum from said user to Shrewd Charlie, which is the current owner right now. Moving on to the next slide. Value or speculate. So the main thing you guys need to know is the difference between intrinsic and extrinsic value of these collectibles. So NFTs serve as the digital version of art. Similar to art, not how cool the picture looks or the aesthetic that determines the valuation of it, but on the value is determined through things such as who the creator is, as well as the value by holding the collection. So with NFTs, the real revolutionary idea behind NFTs is the smart contract. What this smart contract does is, which is different from traditional art, is you are 100% able to verify who owns what art piece, and it's impossible to fake it. By doing so, creators and holders can determine value through things such as creators hosting events, creators giving drops, whether that be cryptocurrency, which we have begun to see. This is, by the way, very new, as NFTs are new technology. But one example that I did illustrate is the Bored Ape Yacht Collection, which is famous, has already launched an exclusive party for owners in New York City in December 2021. Obviously, to be admitted to said party, you have to be a holder. So similarly, what we need to know about smart contracts is that it almost gives you membership to said groups and echelons. And additionally, creators can use that to enrich you in the future as well. We can talk about that a little bit later, but just for the basics, that's what you guys. So finally, next slide. So I'm just gonna give you guys a short step-by-step process from A to Z how to purchase one, as if you guys had zero crypto knowledge or anything. So excuse me. So the first step would be opening a crypto wallet. So for this example, I use MetaMask, it's quite common. You can download an extension on Google Chrome. Once you create your MetaMask account, the next thing you need to do is create another. So this wallet is to hold your cryptocurrencies and your NFTs. The next thing is purchasing crypto. So the first thing you would do is open another account using email address name on a cryptocurrency exchange, so you can actually purchase the necessary crypto to purchase the NFT. So the example I use for that is KuCoin. So like I mentioned before, most NFTs are on the Ethereum or the Solana networks. So you'd be purchasing said Ethereum or Solana on these cryptocurrency exchanges. If you haven't used them already, there's options for wire transfers, bank transfers, as well as transferring assets from bank accounts, for example. So from doing so, let's say you purchased the necessary amount of Ethereum, you'd store it on your MetaMask account. So you'd withdraw it from the auction, not the auction site, from the cryptocurrency site into your MetaMask account. Doing so, you incur some transaction fees moving the money around, which you would see from the bottom right. It's a similar pop-up you would see on MetaMask for withdrawing the money into your wallet. From doing that, the next step is connecting your wallet to OpenSea or an NFT auction site. Once you connect your wallet to OpenSea or NFT auction site, you'd find a piece that you'd like to purchase. Like I mentioned before, there's a bidding process. So it would tell you the current bid is, for example, 2 Ethereum. The auction closes in 2 days, and you obviously bid, and hopefully if you have the highest bid at the end of the period, the NFT is yours. Like I said before, since it's all digital and done through the blockchain, if you are successful in your auction, it is automatically transferred into your MetaMask account, your wallet. The NFT will be transferred there, and the necessary crypto would be exchanged. Next slide, please. Poll question. Yes or no? Do you guys think NFTs are a good investment? All right, guys, so we're going to count down. So 5. So make sure you guys answer the poll question. 5, 4, 3, 2, and 1. So 50-50. Wow. All right. So that's right dead in the middle. Do you guys think NFTs are a good investment? So just my personal opinion, with most things, you should only invest in what you know. If you're interested in NFTs, do your research. And on the other side, if you don't think NFTs are a good investment, maybe research more and see. Like I said before, it's not the picture of a monkey that gets you the value from a Bored Ape, but the smart contract and what groups and what memberships and what privileges being in said collections and being a holder of these are. The last thing I want to say before moving on to the next section is I had a question from Teresa. Can you sell NFTs which were gifted to you? And if so, how? So the first thing is, if someone wants to gift you an NFT, similar to giving, let's say, crypto as a gift to a friend, all they have to do is send it to your wallet address. Once they send it to you, it is in your collection. It is up to you. And finally, once you have it, if you want to sell it for a profit, you just list it on an auction site. And just as you would buy, you do the exact opposite. So you'd list it, you put when you want it done by. So let's set an auction for a week, 7 days, set the starting bid, and then from there you let it go. We have another question from Harris on how do you stake an NFT. So staking an NFT is similar to staking a crypto in that you're being forced to hold it for a set amount of time, often for a reward. For cryptocurrencies, it's yield. NFTs as well, sometimes there's yields or airdrops. That's a little bit more advanced, so we won't cover that in this information session. But if you want more information on that, I would suggest watching a few videos, and maybe we can do another information session later.
Hi, everyone. My name is Anthony, and I'm going to be taking you guys through the charting section. Super excited to talk to you guys about this, and just wanted to let you guys know that if you guys have any questions at all, please feel free to drop it into the chat, and I'm going to do my best to keep up with it. Next slide, please. So I just wanted to start with a brief primer of some of the stuff we're going to be talking about before we jump into the charts themselves. So the very first thing that I wanted to talk to you guys is about candlestick. Candlesticks are the building blocks of every chart. And just like this diagram shows, when we're looking at a green candlestick, it's essentially representing an increase in price over some sort of time. So let me back that up for a second. Candlesticks have different time periods. Basically, all candlesticks really do is just tell you how a price moves during a certain time period. So for example, if you were to set your candlesticks to a daily candlestick, the candle that was formed today on a chart would represent all of the price movement within today. So for example, let's say today Apple opened at $100. That where we see the open bar, that's what we would see. If let's say at the beginning of the day, Apple dropped a little bit to its low and then went back up, it would leave a little wick, which is basically just telling you that, hey, Apple did trade at that price. It was slightly below open, but then it ended up trading up to the high at some point during the day. And at the end of the day, when the ring bell was at 4 o'clock, it ended up closing at whatever price, let's call that like 105 or something like that. So that's what a candle basically represents. It just represents price action within a certain period of time. And conversely, with a bearish candlestick, you have the same deal, except for in this case, the open is higher than the close, and the wicks represent the same. Next slide, please. Right, so one of the key things that you have to remember when looking at a chart is just being able to identify the trend. So the graph that we see below is a very basic representation of what graphs typically look like. In an uptrend, the general pattern that you want to look for is that the price action has this sort of pattern. It makes a higher high, then a higher low, right? And just so you guys know, HH is higher high, HL is higher low. So it has this pattern of making higher highs, higher lows, higher high, higher low, higher high, higher low. And then finally, when you have a trend reversal, when a stock enters into a downtrend, you have the opposite. The stock will start making lower lows, lower highs, more lower lows, and lower. And as you can tell by this diagram, it also generally follows this. The reason why it makes these sort of higher highs and higher lows is because trends typically follow a pattern of having an impulse, right? So if we start on the left, that first little upswing was an impulse wave. And because, a movement can't sustain itself upwards forever, right? It can't just keep going up, 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 right? Sellers are going to come in eventually. You have periods of consolidation, which build those lows. And so those are the things that when you're looking at a chart, you really want to dissect, like where's the impulse, where's the consolidation, and is the trend generally making higher highs and higher lows when you're in an uptrend, or is it making lower lows and lower highs when it's in a down? And this is important because, if you have, say, a long strategy, you don't intend to short sell, right? You just want to buy a stock and hold it until we go into a bear market, right? You have a long-term perspective. You want to make sure that you know what cycle you're in. You want to make sure that you can identify, like, hey, yeah, Apple is currently in an uptrend. It's doing fine. I don't need to worry. But as soon as the trend, turns to the downside, you want to be able to identify, hey, you know what? The trend has changed. I'm going to sell out right now and wait until the trend changes. And the last thing I wanted to touch up on in terms of trends is this concept that typically we assume that a trend is going to continue unless that assumption is invalidated. Right. So if a stock is in an uptrend, it's making its higher highs, it's making its higher lows. typically a technical analyst will assume that that stock will continue doing so until it makes a lower low, in which case, that assumption that it's in an uptrend is invalidated, and you change your assumption and assume that it'll continue to trend low. Next slide, please. So building off of that, there's a very important concept in technical analysis, which is this concept of support and resistance area. So basically, a support area is just a place where buyers feel very comfortable buying up a stock. And a resistance level is an area where sellers are highly incentivized to sell, right? So for example, if we look at the charts at the bottom, right, we see that, for example, with the chart on the left, the first time that the price action touched that red bar on the top, we had a sharp sell-off, right? So sellers came into the market. They were like, you know what, this thing is overvalued. We want to sell this. Conversely, when it reached the green bar, the buyers came in and bought up the stock a lot, actually twice. At the bottom there, you can see that the price action hit it twice. And so that's the basic principle behind support and resistances, just identifying where buyers and sellers are likely to show up in a big way. So you could sort of plan around. And an important concept to understand is that support and resistance levels are not permanent. And oftentimes in an uptrend, a resistance will turn into a support. And conversely, in a downtrend, a support will become a resistance. So for example, on the chart on the right side, we can see how on the left side of the chart, there was a huge sell-off when the stock hit the red line, right? And again, it went downwards, came back up, hit another resistance level, which is supported by the fact that it hit that level twice and got sold off quite dramatically. But then we see on the right side of the screen that those same levels later acted as support. Buyers felt comfortable buying at those levels. And we see that, for example, in that, if Derek could kind of like highlight that big pattern on top, actually, to the right of the top right of the screen.
My bad, sorry.
Yeah, it's okay. I wish
Over
I had
here,
control.
feels covered
Yeah.
by the people.
Yeah. So yeah, you can see how the price bounced off of that upper green line several times as buyers felt comfortable to buy in that area. So that's the general concept of support and resistance levels. Next slide, please. And lastly, I just wanted to talk about the main indicator that I'm going to be using in our session today, in our interactive session. So I'm going to be talking to you guys a little bit about moving averages. The most famous moving averages used by technical analysts are the 50 MA moving average, which is the green line that you see on the chart. Then you have the 100 moving average, which is the orange line that you see. And sorry, the slide is actually wrong, but the white line is a 200 moving average. And so basically what moving averages are just, it take the last, like, for example, with the 50 moving average, it takes the last 50 periods of price action. So for example, if you're using daily candlesticks, it'll use 50 days worth of closing prices and spit out an average. Same thing for the 100 moving average and same thing for the 200 moving average. And moving averages can be pretty helpful for several reasons. First of all, sometimes trends can be a little bit tricky to identify. And so you can use moving averages to try and gauge the trend of a stock. So for example, you could see in the snippet that I posted that when this stock started moving upwards, all the moving averages had a upward slope. However, when the trend changed, all those moving averages started sloping downwards. And so that's one way you can gauge general momentum and just a trend. And in addition, moving averages can also be used as an alternative method to gauge where potential support and resistance levels can be. So for example, we see that several times the price action got support off of that white 200 moving average. And conversely, when it started downtrending, we see that the price action found resistance on that white 200 moving average, and even oftentimes off of that 100 moving average. So that's the value of moving averages. It's a very simple indicator, but to be completely honest with you, it's is one of the most important ones. There are a lot of very complicated indicators. This is a pretty simple one, and in my opinion, one of the most useful. And so now I'm going to take you guys into the charts. I encourage everyone to follow along. I'll show you guys how to get access to the same platform that I'm using, which is TradingView. So this is going to be my copy, but so in order to get access to TradingView, just open up your browser, search up TradingView, and it's a super popular platform, so it should pop up right at the top here. You just click into it. Up here at the top, you have the chart button. Click right into that, and there you go. You've got the TradingView interface. Personally, I like a dark interface. I find that the light interface hurts my eyes. So if you guys want to do the same, all you really have to do is just right click onto the chart, and in the color themes, you would just select dark, and there you go. I think it's a lot easier on the eyes and also a lot prettier. Actually, can we just run a quick poll, just making sure that everybody who wants to be on TradingView with me is on here?
We can't do a poll, but if anyone isn't or needs a little bit more time, they can type that in the chat or unmute themselves and let us.
Thank you, Marcel.
Yeah, Anthony, I think you're free to keep going.
Awesome. Right, so I'm just going to start with a brief overview of the platform, just the different functionalities. So the most important one over here, you've got the symbol search. This is how you're going to search up different stocks and pull up their charts. So for example, if you wanted to take a look at Google's chart, you would type in their ticker, which is GOOG, and here's its chart. One thing I love about TradingView, by the way, is that you can scroll in and out, like zoom in and out with your mouse wheel. It's super convenient. And just to give you guys another example, if you guys wanted to look at Facebook, for example, just put in their ticker, FB. Wow, the price action's pretty crazy on Facebook right now. And that's how you would get to there. The second most important thing, in my opinion, is this button over here. So this is your candlesticks, the length of your candlesticks. I hope you guys remember that, as we talked about earlier, each candlestick represents a price action within a certain period of time. So for example, right now we're on the dailies, right? So for example, this candlestick right over here represents 1 day worth of price action, same way that this is 1 day worth of price action and that's 1 day worth of price. However, if I wanted a more macro view of everything, I would go, for example, to the weeklies, right? Where, this one candle represents 1 whole week worth of price action. And the same way, if I were to go to 1 month, this one candle represents 1 whole month of price action. So that's a very important thing to note, because I know a lot of people who get started with this stuff, that's often a place where they get very confused. So I wanted to make sure that everybody understands that very clearly. And lastly, on this top ribbon, I think I want to address indicators. So the indicator button over here allows you to search the whole array of different indicators that TradingView offers. So for example, we wanted to use moving averages. So if we wanted to add that right now, all you would do is search moving average and literally just click onto it. If you're following along with me, just click it 3 times because we're going to have 3 moving averages, and I will return to that a little bit later. But that is generally how you add your different indicators. All right, so on the left ribbon, you have a lot of different tools. So for example, you got your trend lines. These are your drawing tools. These are pretty helpful if you want to draw little trends. So go to a different time frame so it's a little easier to work with. But say you wanted to draw a certain trend, you were like, oh, look, it's a downtrend, right? So you could take this, draw a line, and it kind of just acts like a very good visual tool. And you got other different types of lines, like you got like a horizontal line. You could change the color, you can make it thicker, There's a lot of like things you could do with that, as well as even like vertical bars. Like this is a key moment. Let me mark that. You got some more like built-in functionality here. So for example, I'm not sure if I'm going to talk about this in this presentation. If I have time, I will. But for example, Fibonacci's, this is a built-in tool. And so like there's a lot of tools here, lots of them, to be honest, even I don't understand. Like there's like all these like rays and stuff. I have no idea what they are, to be honest. I never ever use them, but they exist. If people want to learn about them, they're all here. It's one Google search away if you're curious. You got like different geometric shapes. So if you want to indicate like, oh, this is a significant area, right? You got like different shapes like that. You got like rectangles and stuff like that. Basically, TradingView is just trying to make this very interactive. You could add text, high, make this nice and big, bold it out, and there you go. So you got a lot of nice little functionality going on the side here. One thing that I use pretty frequently is this measure functionality. So basically you just click on it and you just drag it. You click on one point, you bring it up, and it allows you to basically just measure like, for example, from that point to this point was a 60% increase over 134 days. So it's a pretty useful tool. And I think the last thing I wanted to address in terms of ribbons was on the right here, you got a bunch of different ribbons as well. So you got like the watch lists. You could add different stocks if you want to like keep track of Facebook. Okay, I'd have to create an account for that. Actually, let me just transition over to my paid version. So yeah, you could create like different watch lists. So for example, I have a bunch of watch lists over here. You could set up alerts. So for example, if I wanted to know when the price action came below this white line, I could actually create an alert that would ping me if the price action ever came below it. And there's also a few other things here, like a data, no, that's not what I was going for. You got like calendars and stuff, and there's a lot of functionality built into TradingView, honestly, that I don't even use to its full extent, but super useful stuff. So now I think I'm gonna actually jump into some of the stuff we talked about earlier. So to start, we started off our conversation with identifying uptrends. And so I'm just going to start at the beginning here, at the very, very beginning. And you could see that during this period of time, Intel Core, in our example, was in an uptrend. Started its uptrend over here. It created a newer high, a higher low, right? That was the previous low. This is the new low. And it continued to build higher lows, higher highs, before that pattern was finally invalidated by the fact that it fell considerably below the previous low. And that pattern continued until, again, it invalidated the hypothesis, started creating higher highs, higher lows. And that's basically just the way that stocks move, right? For example, here we see that although on the macro level, we can say, you know, higher low, higher high, higher low, higher high, higher low, right? So generally on the macro, something like this is uptrending. We have to keep in mind that sometimes on the more micro levels, charts do go through downturns. And so for example, in my previous example, if you're one of those traders that goes, you know what, I kind of want to ride the wave, but as soon as the tide turns, I want to get out, you know, this is like a perfect example here, right? You had the stock that was uptrending, it was making higher highs, higher lows, and then finally it reversed. It started making lower lows, higher lows, more lower lows, higher lows, and you would have wanted to get out either here or once it invalidated that bottom. Oftentimes technical analysts look for at least one or two confirmations. So that would have been a good confirmation. And so we see that, like, for example, clearly some people thought there might be support here because of the moving average. It didn't work out. as we discussed, we should always assume that a stock will continue its pattern unless that hypothesis is invalidated. And one way you can do that is like with those kind of support and resistance discussions that we had earlier. For example, if you were, say, in this segment of time, right, you would notice that it created a high right about here. And you would create a rule for yourself saying, hey, if the price goes above this previous high, then I'm going to assume that the trend has changed. But if it doesn't, then I'm going to assume that the trend will continue. And so, it never ended up breaking above it, and the trend did end up continuing downward. Another thing that technical analysts do is they often find not only horizontal resistance levels, but they also find like diagonal ones. And so we can see in this example, the price was bouncing off of this particular trend line, the red one, several times, right? The sellers came in here, the sellers came in here, the sellers came in here, here. So lots of points to validate the argument that this general trend line is a resistance level. This is where that's where the sellers came in. Conversely, when the price came above that trend line, for lots of technical analysts, that would be an indication of a trend reversal. And so if you were looking at a bull market, you might want to also draw a trend line that, indicates some sort of like expected support levels. But again, we got to always keep in mind the macro, right? If you're okay dealing with all of these downturns and your end goal is not to day trade and it's just to invest here and sell here, then all of this micro stuff does not matter. If you're trying to swing trade something, if you're trying to, buy it here and sell it here, then yes, you'd like to keep track of when the trend changes on the more micro levels. And you can do that by switching your candle intervals to get a more nitty gritty view. Yeah, so what did I want to talk about next? And just like I discussed earlier, moving averages are a super useful way to gauge trends. So we can see even like right off the beginning, right, that typically as long as the price action was above this 100 moving average, which I just remembered I did not show you guys how to set up. So I'm going to go back and do. I'm very sorry, everyone. I kind of got ahead of myself. But essentially, so you guys could kind of set this up for yourselves and view it on your screens. Once you set up these moving averages here, which I'll show you guys again, you guys go into this indicator section, you search up moving average, you click on it several times, 3 times, so you have all 3, and then you would go into each one individually to this little scroll bar where it says settings. And so the length here describes how many days, right? So we want the first one to be 50, right? And to change the color, you would go into the style. I like to use green for the shorter time frame, and I like my line to be a little bit thicker. So in the visibility section, if this thing will leave me alone, ideally, please.
Escape.
Nope, trading views being annoying like that. All right, I'll go back to mine where it won't be so annoying. So yeah, in the visibility, wait, did they change this? They might have changed this. Oh no, never mind. So in the down here in the style, you have the thickness, and you can change the thickness of your bar. So for example, if I wanted to adjust the thickness of my green bar, see if I click on the thickest one and it becomes really thick. A little too thick for my taste. I usually go with this second one over here. So that's just how you set up moving averages. Yeah, so back to what I was saying earlier, moving averages are a great way to generally assess the direction of the trend. We can see that generally the price action in this stock, while it was in an uptrend, mainly respected the green moving average, and even in other trends, the orange moving average. And typically we found that when those trends were broken, when the price action fell below those moving averages, the trend would change. And we could also see that these moving averages do in fact often act like very good support and resistance levels. We see that over here, the price action came down to this green moving average, the 50, bounced off of it and continued its trend. Came down to the green moving average, bounced off of it, continued its trend. We see here the trend reverse. It found a little bit of support here before it continued its trend down to the next moving average, bounced off of the green moving average, which was previously support, now turned resistance and continued falling. The white moving average turned
Anthony,
into, yeah.
We're going to cover this for like another minute or 2 minutes, and then we're going to head on to the next topic.
Sounds good.
Because we're capped for questions. Thanks.
Yeah, absolutely. So yeah, and so like yeah, that's pretty much the main
I
points
know
I
I
wanted
killed
to
your
go.
train of thought there.
No, it's fine. Those were the main things I wanted to cover there. I wanted the main takeaways I want everyone to take from this is when you start your analysis, make sure that you always start with the highest level overview as possible. I'd recommend the monthly and the weeklies. You want to get a general understanding of the direction of the trend, and then you can start to make your way down into the lower time frames and try to dissect it on a more micro level. But super important, start with the higher time frames, get a general sense of what's going on, and then start dissecting it up on the lower time. And otherwise, be very mindful of support and resistance levels. Those are often very good entry or sell places, and generally trade with the trend is a rule that many technical analysts follow. That's all I had to say on that section.
Awesome. Thank you.
So it's actually time for the Kahoot now. So I hope everyone was paying attention.
Derek, could you reshare your screen?
Oh, of course, my bad.
I'll be sharing the Kahoot screen. So there's no,
Oh, never mind.
yeah.
Okay.
Marcelo got it.
So the prize is a $10 Amazon gift card for whoever's first. So good luck, everybody.
25.
25. Okay. Wow. Very generous we are. I wish I could. Everybody pull out your phone. Also use your real first name if you want to be eligible for the prize. So don't make up some. If you want Kahoot, the Kahoot music is kind of addictive.
That's the whole appeal.
Pretty sure it releases some type of chemical in your brain.
I did a Kahoot once with no music. Terrible.
So what's the point?
I know.
That's not the same.
13.
Oh, no name.
No name. I hope you don't want the prize. Are people still trying to join?
We can give it another minute. Start it up.
Okay. Gonna give around like 10 seconds.
Yeah.
Pardon?
I think we're good.
Okay, no one's okay. Question 1. What is the largest stock exchange in the world? 3, 2. Here's the 90. Most people got Alan in the lead. So stock A has an ask price of 20, bid price of 10. Stock B has an ask price of 100 and bid price of 75. Which is more likely? All other B. 2. Answer is stock B. Kareem rises to the.
That was pretty hard.
Where was the first stock exchange? 3, 2, 1. The answer is Amsterdam. Most people got it right. Kareem's still in the lead. True or false? You can purchase NFTs at any time of the day. 3, 2. The answer is true. Oh, everyone got it right. Can anyone create an NFT? 3, 2, 1. The answer is yes. Who chose the green?
I like the fourth answer. We should make our own.
Totally could.
Kareem is still number 1. What blockchain network are NFTs smart contracts most commonly stored? 3, 2, 1. The answer is Ethereum. Most people. Wow, Kareem's doing pretty good. A macro uptrend is marked by 3, 2. The answer is higher highs and lower highs on weekly and month. Kareem's still number 1. Second last question. The following candlestick length in order is recommended when conducting your analysis.
Wow.
3, 2. Okay, last question. This is the hardest question, so I think everyone should just buckle up, get ready, get your fingers stretched and ready. I will sign up for the stock simulation challenge.
Oh.
Who got it wrong?
Yeah.
See who the winner is. Drum roll. We have FH in third place. Please in second place. The winner is Kareem. Good job. You will be reaching.
Congratulations, Kareem. We will be reaching out for an Amazon gift card. If anyone has any questions, we always like to include a question and answer period at the end of our event. Also, we have a feedback form we will be sending out, so please check that out. And we'll also be giving another $25 Amazon gift card to one winner randomly of whoever fills out the survey.
It's a feedback form. I just linked in the chat. So just fill. It's the easiest way to get money in the world.
It's pretty.
So if you have questions, you can put it in the chat, or you can Feel free to unmute yourself and ask.
Great question. How to become a member of RTA? We do signups periodically throughout the year. Analysts, it's on a rolling basis. So you can email anyone on the staff, and we have applications for analysts to join the team. And then at the end of the year, we do a sort of big hire for all positions. And yes, this is recorded, and it's going to go up onto our website as with all of our past events. You go onto our website under events, under recording.
Any more questions? Have any of you started trading? If so, what have you bought?
If we don't have any questions, no need to keep everyone hanging on. We encourage everyone to sign up for our trading event that starts this Friday and to fill out our feedback form. Thank you all for attending, and have a great night. We're going to have more events later on in the semester, and we hope you enjoyed.
Thank you.